Hello, I am Camilo Paez from the editorial board of the BUP portal, which is the European platform for energy efficiency in buildings. Welcome to this session of our Expert Talk series we are hosting today with Ursula Hartenberger, a sustainability expert in the fields of financing and energy efficiency in the built environment. Welcome, Ursula. Thank you for being with us today.
Hello, Camilo. Thanks for giving me the opportunity to talk about sustainable finance and energy efficiency.
During this month of October 2020, we are addressing and highlighting diverse aspects of this critical topic of financing, funding, and investment for the energy efficiency and environmental sound practices of the building sector. For having some first-hand insight, we reach out to our knowledgeable interviewee today, Ursula Hartenberger. She is a sustainability expert with a track record on managing and initiating projects for research, capacity building, and awareness raising. For more than a decade, her professional focus has been on sustainability linkages between energy efficiency, broader sustainability, and ES criteria and real estate value. She is a member of a series of international sustainable development and responsible investment platforms, and has been closely involved in stakeholder initiatives and publications regarding the business case of sustainability and ethical practices in the built environment. Notable projects in this context have been two EU-funded projects: RenoValue, a capacity building project aimed at skills and knowledge development amongst valuation professionals, and also the EeMAP, the Energy Efficiency Mortgage Action Plan, which develop parameters and tools for green mortgage lending. Most recently, she held the role of chair of the EU Taxonomy Building Sector Group within the European Commission Technical Expert Group on Sustainable Finance, in which she overviewed the drafting and the technical criteria for construction of real estate. Now, to get started with our questions, let's address this latter experience. The EU Taxonomy is a new key tool for sustainable finance that will allow for investors and lenders to determine whether an economic activity is environmentally sustainable. The designated technical expert group into which you took part issued its final recommendations report in March this year. Can you comment about the context and origins of this process, and also about the participation along the way and early reaction from the market, Ursula?
Well, I think in terms of the context, we need to see this in the context of the Paris Agreement from 2015, because I think their signatories to the Paris Agreement didn't just commit to CO2 reduction. They're also committed to aligning financial flows with a trajectory towards a low carbon future. So therefore, cognizant of the fact that you will not receive a significant reduction of CO2 without investment. And in fact, in terms of the European Union, this is exactly what has happened, because to achieve its 2030 and 2050 targets, it's been estimated that the EU would need to spend 180 billion euros a year. So that's quite a staggering amount. And if this is not something that the public sector can do on its own. So, you need private sector investment. So the next step on the journey towards the taxonomy really was the creation of a high-level expert group that in 2016 that formulated recommendations to the European Commission, which then resulted in an action plan, for an EU action plan for sustainable finance. And that action plan actually foresaw 4 pillars. Work on disclosure, work on benchmarking, and on a green bond standard, and then taxonomy, which is essentially it's essentially a classification system which sets performance standards for 6 environmental objectives: climate change mitigation, adaptation, pollution, water, circular economy, and ecosystems. Following the adoption of the action plan in March 2018, there was a call for another expert group, this time a technical expert group, so the so-called TEC, of which I had the honor of being a member. So the work of that group started in July 2018, and then it actually formally closed about 2 weeks ago, so in September. So this has been quite a journey. But on the way, we have been closely engaging with the market, because we want obviously to make sure that there's market acceptance for this tool. So pretty much from the word go, there were formal consultations, but apart from that, we had bilateral conversations. We had workshops, we had webinars to make sure that we understood where there might be some critical issues, but also for the market to understand our thinking and to see where we're coming from, and also to take a little bit of the fear and the concerns that market participants might have had away. Yeah.
Along this process, were there particular conflicting points or trade-offs to consider?
I think it's fair to say that in policy making, there are always trade-offs, yeah, and of course there are trade-offs. So I think probably the biggest trade-off we had was, this was a group of experts, very committed to reducing CO2, making sure that these 6 environmental objectives are going to be met and achieved. So there was a certain level of ambition, of course, yeah, and but we also were quite realistic in that if we were not to succeed to take the market with us and find market acceptance for implementation, you can have the highest of ambitions. If there's nobody to implement those ambitions, and there's only resistance, then you will not achieve your goals either. So that was a constant juggling. Yeah, I believe that we have struck a good compromise, and let's not forget that this is not cast in stone. I mean, this is not the criteria that we've set now, the thresholds we set now. Their starting point. This is meant to be dynamic and flexible, so it will develop, it will evolve, it will also follow any upcoming legislation. Even in the recommendations, this is contained in there, and also there, in terms of the buildings, there is a trajectory for making these criteria and thresholds stricter. Yeah. So, but you've got to start somewhere, and. Another trade-off was, especially with regard to I'm talking now about the building sector, is that, of course, the Paris alignment is in CO2. So the metrics should have really been CO2, but then, a large part of the market, can't do that at the moment. Yeah. So, again, we had to strike a compromise. So for the moment, the energy, the metric is energy, but again, there's a trajectory towards the future that we will switch to CO2. And another thing was that there was actually a lot of demand from stakeholders, quite surprising actually, to take a whole life carbon view with regards to developing the thresholds. We would have loved to do that because embodied carbon is extremely important, but again, the market is just not there. We don't have enough data. reliable data to develop meaningful thresholds. And we just felt that at the moment that just wasn't possible. So, again, one for the future.
Thank you. Those are concrete examples. And now to further address the building sector, what are other direct implications for the building sector from this taxonomy? And in particular, how this European taxonomy will be addressing the Green Deal renovation wave that is foreseen now?
I think for the building sector, obviously this applies. This applies to all the sector that have been covered by the taxonomy. But I think it for the first time it provides a framework. Yeah, an agreed framework that creates a common language around what constitutes a green building. Yeah, that in itself will increase investor confidence. It will also make it easier for professionals, because when they're having conversations with their clients, they can refer back to the criteria of the taxonomy. So that can't be underestimated, because the reason why investment has not been flowing that freely and openly is that it's been very, very difficult to determine what is actually green. Yeah. So if we actually have a definition now around what constitutes a green building, that will help also with renovation, and for owners and for developers. It's going to be much easier now to access green finance. And that in turn will help the renovation wave, the Green Deal, because if there is more readiness to invest in renovating existing building stock, and there's 3/4 of the building stock are completely inefficient, and the renovation rate at the moment is around 1%. That cannot be underestimated. So I think, you were talking about implications. I see this more as an opportunity. Yeah. But of course, the market will need to get used to this. Parts of the markets might be struggling with that, to understand the criteria, to see how that relates to their business activities. And there is, of course, a little bit of a fear that it might also lead to stranded assets, because what do you do with buildings that don't attract, that cannot attract green investment? Yeah, under the taxonomy. But the idea really has been, and this is where there's a link with the Green Deal again. I think it's been to lift the bottom of the market up. Yeah. Which is also why we've been extremely generous around developing the renovation criteria. Yeah, they've been very inclusive, because the focus in Europe needs to be on renovation.
And addressing precisely this bottom part of the market, I understand that a lot of small projects or individual interventions will be necessary, and will this framework, this taxonomy framework, will be benefiting also small size projects?
Yes, because we have we have two different types of renovation activities. So there is large scale major renovation, but then we've also got a category which is around individual measures, and this is exactly what you were talking about. I mean, it's designed to also enable access to green finance for individual measures and small scale projects. So you're talking here, I mean, for example, if you were to replace just your windows and you're not going to undertake any other measures at the same time, and you're not going to reach the 30% improvement threshold that is part of the overall renovation activity, or if you were to install renewable energy sources on site, or insulate your building, and even professional services. So if you have like an energy auditor or an energy assessor, advisor, you know, that is also something that would be eligible under the taxonomy, buildings category, buildings sector, individual measures category. So as I said, it's quite generous because we are aware that we need to tackle the renovation challenge, and the more even small scale projects we can encourage to be undertaken, the better.
Great. And during this process of defining the criteria and the classification, how were considered existing building certification or rating systems existing today to build this taxonomy?
Again, the certification systems are a market reality. Yeah, they are there, and I think they've helped an awful lot to raise awareness and to around green buildings, and they've created a framework and set of criteria, and the idea that we completely discard their existence, has never really been a discussion. So what we've actually recommended to do is for these certification bodies and labels to apply for accreditation with a sustainable finance platform. So essentially, in practice, it means that they have to prove that a certain label or a certain band within their certification system is aligned with the goals and the thresholds of the taxonomy. Yeah. So, for instance, BREEAM, DGNB, HQE, or LEED. So they would be able to get accreditation, and others as well. Yeah, we did not want to prescribe a list of certification systems that could be eligible, because there might be very small regional ones that we were not aware of. And let's not forget that there is an international dimension to the whole taxonomy. And we may not be aware of all of the labels that might be eligible under the taxonomy. So that's why we just turned it around and created this accreditation system.
Now, maybe to address further the topic of finance, the building sustainability, we would like to know your views on the evolution of different sustainable finance schemes for buildings, such as green mortgages or energy contracting for carrying out works, or on-bill schemes that are promoting this transformation of the building sector.
Yeah, again, I think that now with the taxonomy, and as it is being actually rolled out into the market, we will see much more of these smart financing schemes. I mean, there's, you mentioned in your introduction that I've had some involvement in the EeMAP, in the energy efficient mortgage action plan. So we had a significant number of banks signing up to the initiative, and there is a real willingness now amongst the financing institutions to develop dedicated products that will ultimately also benefit small projects and end users. Yeah, and I think that's very important, because it's one thing if you're a big investor or a big real estate company to show taxonomy alignment, but what we need to do is now develop on the back of that more products that will engage that will engage homeowners, that will engage even SMEs, and that are not too complicated. And I think we will see far more innovation in that market now that we have a framework.
And what about the evolution of the evaluation of green building performance or energy efficiency performance of buildings? Will also the taxonomy be making a difference here?
I think if we go back 10 years, it was still quite difficult to engage the valuation community on green issues because it was always a case of like, show me the evidence. If you haven't got, there is no market evidence, we cannot reflect it. I think that's changed quite drastically. That's also changed because I think the policymakers have realized that the pivotal role of financing and also of valuation in helping to articulate the business case. So over the last, I would say, 5-6 years, also with the establishment of the EFI group by the Commission together with UNEP-FI, the emergence of a number of EU projects in this area. You mentioned RenoValue, which we were leading on at the time, and then the Green Mortgages project that we've also been mentioning before. There is now, I think, a more pressure on the valuation community to embrace these issues. There's also much more guidance out there. There's also, more awareness around this because clients are actually asking. So maybe the demand wasn't there 10, 15 years ago, at least not a widespread demand, but that's certainly changed now. There's much more awareness around. And valuers need to follow suit. Yeah. That's not to say that a valuer needs to be, a building surveyor or needs to have the same kind of skill sets than an architect or an engineer. But I think there's more realization around having to understand energy efficiency and what makes a building energy efficient and what doesn't amongst valuers now in comparison to a decade ago.
Having shared these insights, can you please tell us what are some of the next steps, and maybe also considering the ongoing COVID stop and reset process we are undergoing this year, have these changed something on the provisions for the taxonomy or change the priorities of the process?
In terms of the timeline, I don't think it's changed anything. It has made it much more difficult because, we were not able to meet in person anymore. So everything had to be done by Zoom meetings or by other means of online collaboration. But we met all our deadlines and the work of the tech now is finished, and the baton will be handed over to the Sustainable Finance Platform that will be operational in October 2020. And in parallel, the work will continue on finalizing the criteria for the climate change mitigation and adaptation taxonomies. And on top of that, obviously, there will be new work on the 4 remaining environmental objectives. All of this needs to be done by the end of 2021, because then in the beginning of 2022, companies will do their first reporting and investors will need to do their first disclosures under the taxonomy. That is not that far into the future, so a lot of work still needs to be done. As for your question around COVID, I think we from a tech point of view issued actually a statement in spring, stressing the importance of a green recovery and the importance of any investments that are being made also to consider the taxonomy criteria. Because we feel that with all those millions that are now being spent, we need to make sure that they also help to build climate resilience and a greater resilience against any environmental or social crises that may emerge in the future.
And what about policy adaptation required in this process of implementing the taxonomy, maybe at the member states' national level?
I think one thing that has come up over and over again, not just in the development of the taxonomy criteria, but through loads of projects and initiatives that I've been involved in, is the lack of data. There's a direct link back to valuation again, because without data, you cannot factor certain aspects into your valuation practice. And I think that's really hampering progress. And I was mentioning before the inability to cater for whole life cycle carbon because of the lack of data. But that is not the only area where there is a lack of data, or, let's not call it a lack of data, but it's just data is not captured or managed in a systemic and coherent way, especially within the built environment. So there are no moves globally, but also at EU level to address this. There's the BLOG project that DG Growth is running, and I'm really hopeful that this will get also member state support. It's essentially it's a digital repository, data repository that will capture data across the whole life cycle. So, whilst it might not be just for energy efficiency purposes, but it certainly will allow conclusions to be drawn also in terms of a building sustainability. So data, I think, is one thing that policymakers should really focus on, especially for sectors where the data situation isn't good or optimal. Another thing that, from a financing point of view, is that some frameworks are actually hampering, hindering banks to develop these smart financing products that we were talking about earlier. So, a reversion of capital requirements under Basel III would certainly help to trigger more. A much wider deployment of green mortgages. So that's something that needs to be looked at. But of course, the taxonomy will only, it's a fairly new tool, and we need to see how this works also in the market. But I think that if it shows that there needs to be some tweaking of policies or development of new policies to support the taxonomy, I'm sure that the Commission is going to consider that, given the emphasis and the focus that it is currently placing also on sustainable finance. There was a consultation on a renewed sustainable finance strategy, and from what I've heard, there's been an enormous response. So I'm sure that the Commission is working hard to make sure to listen to the stakeholders and adapt its policy making accordingly.
Great, Ursula. Thank you. Thank you for all these outlooks, and we look forward to the unfolding of this process and for taking part of it.
Thank you.
Thank you all for following too.